Friends, we now come to solution of past exam questions. In past exam questions, we are firstly looking at question 1. Now in question 1, first we must read the question, what is the information provided. In question 1, they are saying A, B and C are partners sharing in ratio 3:2:1. So their old profit sharing ratio is 3:2:1. Balance sheet is given. After balance sheet, now in balance sheet joint life policy is also given. After balance sheet, B retired on 1st April subject to following conditions. So point 1, 2, 3 is revaluation, point 4 is about joint life policy. Joint life policy will appear in balance sheet at surrender value after B's retirement. So they are not surrendering the policy. They are saying it will still appear in balance sheet at its surrender value. And surrender value is 1,50,000. So like any other asset, we will simply revalue joint life policy. And profit or loss will be transferred to revaluation. Goodwill is 3 years purchase of average profit of 4 years. We are given profit of 4 years. Amount due to B is to be transferred to his loan account. So we are supposed to prepare revaluation, capital and balance sheet after B's retirement. So it's a pretty simple example, friends. We'll start with balance sheet. In balance sheet, first of all, we are given balance of capital. Opening balance of capital. A's capital is 8 lakh. B's capital is 4,20,000. C's capital is 4 lakh. We are then given general reserve 3,60,000 in balance sheet. Even that general reserve will be distributed among partners in their profit sharing ratio. General reserve of 3,60,000 will be distributed in the ratio 3:2:1. So it will be 1,80,000, 1,20,000 and 60,000. Then B retired and we are given revised value of certain assets like office equipment is revalued at 3,27,000. Office equipment in old balance sheet it is given at 2,80,000. So we are supposed to increase its value by 45,000. Entry will be office equipments to revaluation. Office equipments to revaluation. Building to be reduced or revalued at 15 lakh. So value of building is to be increased by 5 lakh. Entry will be building account debit to revaluation. Building to revaluation 5 lakh. Furniture is written down by 40,000. Entry will be revaluation to furniture. फर्नीचर का वैल्यू 40,000 कम करना है. Stock reduced to 2 lakh. So we need to reduce value of stock by 50,000. Revaluation to stock. Provision for doubtful debt is to be created at 5%. Now, debtors are of 3 lakh. Look at balance sheet. Debtors are of 3 lakh. 5% of 3 lakh comes to 15,000. So your provision for doubtful debt should be 15,000. Already given in balance sheet is 30,000. 5% of 3 lakh came to 15,000 and the balance of provision given in balance sheet is 30,000. So we are supposed to reduce our provision by 15,000. 3 लाख का 5%, 15,000 प्रोविजन रखना है, मेंटेन करना है. बैलेंस शीट में 30,000 दिया है तो प्रोविजन रिड्यूस करना है, कम करना है बाय 15,000. सो टू रिड्यूस प्रोविजन एंट्री विल बी प्रोविजन फॉर डाउटफुल डेट टू रीवैल्यूएशन. Provision for doubtful debt to revaluation. Then they are saying joint life policy. joint life policy in our balance sheet is appearing at 1,60,000. In old balance sheet, joint life policy is 1,60,000. And they are saying it is to be shown at 1,50,000 in new balance sheet. It is to be shown at its surrender value in new balance sheet. Surrender value is 1,50,000. So in old balance sheet, joint life policy is 1,60,000. In new balance sheet, we need to show it at 1,50,000. So we are supposed to reduce its value by 10,000. And to reduce its value, entry will be revaluation account debit to joint life policy. Revaluation account debit to joint life policy 10,000. Close revaluation now. $5,62,000. So 4,62,000 is profit of revaluation. And this profit will be distributed among partners. Will be distributed among partners in their old ratio, sir. Old ratio is 3:2:1. So 2,31,000. 1,54,000 and 77,000 will be transferred to partners' capital. $2,31,000, 1,54,000, 77,000, correct? Yes, sir. Goodwill. Let's calculate goodwill first. How much will be your average profit? Average profit, that is 90,000, 1,40,000, 1,20,000, 1,30,000. Average profit comes to 1,20,000. So goodwill is how many years purchase of average profit? Sir, it is 3 years purchase of average profit. So firm's goodwill comes to 3,60,000. Firm's goodwill comes to 3,60,000, correct? What should be treatment for goodwill? There are 3 partners. We need to raise full value of goodwill in old ratio. So 3,60,000, that is full value of goodwill, will be raised in the ratio 3:2:1. And then we'll be writing off full value of goodwill in their new profit sharing ratio. We'll be writing off full value of goodwill in their new profit sharing ratio. What is their new ratio? Not given, sir. If new ratio is not given, we'll take it equal to old ratio. जितना old ratio था वही उनका new ratio है. That is 3:1, sir. 3:1. So 2,70,000 and 90,000. So A's capital should be debited with 90. B's capital will be debited with 120. C's capital will be debited with 30. So B's capital will be credited with 120. So AC to B. To B's capital. And in B's capital on credit side. Correct. Now, what is amount payable to B? Amount payable to B comes to 420 plus 120 plus 154 plus 1,20,000. Amount payable to B is 8,14,000 that will be transferred to his loan. And remaining balance in A and C's capital account. Balance in A's capital 11,21,000. Correct? Yes, sir. So in balance sheet, capital of A and C. C's capital is 5,07,000 and how much is A's capital? 11,21,000. $16,28,000. Similarly, B's loan account. B's loan account is showing balance of 8,14,000, sir. Then sundry creditors, they are unchanged, 3,70,000. In assets, revised value of building is 15 lakh. Revised value of building is 15 lakh. Furniture written down by 40,000. So new value of furniture (2 lakh). Office equipments, new value is 3,27,000. stock revised value is 2 lakh. Sundry debtors are of 3 lakh, on which we have created provision of 15,000. Joint life policy. Joint life policy will appear in balance sheet at its surrender value of 1,50,000. And is there any change in cash or bank balance? No. Cash at bank will remain at 1,50,000. So balance sheet total comes to 28 lakh 12,000. I hope the sum is clear. Was a simple sum. You may pause and copy the example. Friends, we are now looking at solution of past exam questions. Question number 2. Past exam question number 2, page number 165. Look at the question. You are given Dinesh, Ramesh and Naresh are partners in a firm sharing profits and losses in the ratio 3:2:1. Old ratio is 3:2:1. You are given balance sheet of firm. After the balance sheet, they are saying partners have agreed to take Suresh as a partner. So it's an example of admission of a partner with effect from 1st April 2018 on following terms. Suresh shall bring 8,000 towards his capital. Value of stock is increased to 14,000. Furniture and fixtures to be depreciated by 10%. Reserve for bad and doubtful debt at 5% of trade receivables. So these are information about revaluation of assets and liabilities. Value of land and building is to be increased. Value of goodwill be fixed at 18,000. Now whether new partner is bringing his share of goodwill in cash or not, that is not clarified. They are only specifying new value of goodwill is fixed at 18,000. Now whether new partner is bringing his share of goodwill in cash or not, if that is not clarified, we always go by the assumption he is not bringing any premium for goodwill. He is not bringing his share of goodwill in cash, correct? New profit sharing ratio is equal. It is to be divided equally among partners. There was an outstanding liability of 700 due to Ram. Ram is not a partner, he is a third person. So there is a liability of 700 due to Ram which had been paid by Dinesh. So a liability is being paid personally by a partner. Necessary entries were not made in books. So prepare revaluation, capital account of partners and balance sheet of the firm after admission. Correct, sir. We'll start with the information that is provided in balance sheet. In balance sheet, firstly, capital balances are given. Capital balances are given. Capital balances are given 15, 15 and 10,000. Then there is also balance in general reserve. General reserve will be distributed among partners. General reserve will be distributed among partners in the ratio 3:2:1. So 3,900, 2,600 and 1,300. Yes, sir. Then cash and bank balance 2800 and 2200 is given. After the balance sheet, you are given Suresh shall bring 8,000 towards his capital. New partner is bringing his capital. Entry, only think of journal entry. What will be the entry? Sir, cash account debit to Suresh's capital. Cash debit to Suresh's capital, 8,000. Then value of stock is to be increased to 14,000. So value of stock in balance sheet is 12,600. If it is to be increased to 14,000, we are increasing its value by 1,400. Entry we would be passing is stock to revaluation. Stock to revaluation 1,400. Furniture and fixtures to be depreciated by 10%. So we need to reduce value of furniture and fixtures by 720. Entry will be revaluation to furniture and fixtures. Reserve for bad and doubtful debt shall be provided at 5%. So your debtors, trade receivables are 10,700. 5% of 10,700 comes to 535. Entry will be to create reserve, revaluation account debit to reserve for bad and doubtful debt. $535. Then value of land and building to be increased by 5,600. Entry will be land and building to revaluation. Land and building account debit to revaluation. And value of goodwill. Goodwill won't come in revaluation. We'll close revaluation first. Profit in revaluation comes to 5745, and this profit will be distributed among partners in their old ratio. Entry will be revaluation account debit to partners capital account. Dinesh, Ramesh and Naresh will be distributed among 3 partners in their profit sharing ratio. So it will be 958 for Naresh, 1915 for Ramesh, 2872 1915 2872 1915 and 958. So profit of revaluation is being distributed among partners. We'll now decide treatment for goodwill. There are 4 partners, correct? Dinesh, Ramesh, Naresh and Suresh will raise full value of goodwill in old ratio. That will be 9,000, 6,000, 3000. 3 is to 2 is to 1. And will then write off full value of goodwill in their new ratio. Raise full value in old ratio, write it off in new ratio. So it will be 4500 for Dinesh. New ratio is equal. So Dinesh's capital should be credited with 4500. Ramesh will be credited with 1500. Naresh capital will be debited with 1500, and Suresh's capital also will be debited with 4500. So entry we get is Naresh capital debit, Suresh capital debit, to Dinesh, to Ramesh. To Dinesh and Ramesh's capital. 1500 and 4500. And by Naresh and Suresh's capital. Correct. Then after goodwill, there is one more adjustment. Outstanding liability include an amount which is payable to Ram. It is paid by Dinesh. So can we say outstanding liabilities are reducing? Outstanding liability कम हो रहा है. Liability का कौन सा balance होता है? Sir, outstanding liability must be showing credit balance. Liability का कौन सा balance होता है? Credit balance. To reduce it, we need to debit that. So entry for transferring this liability to Dinesh. क्योंकि ये liability Dinesh ने pay कर दिया है. Since it is paid by Dinesh, firm is now liable to pay to Dinesh this amount. So entry for transferring this liability to Dinesh's account will be outstanding liability to Dinesh capital. Outstanding liability to Dinesh's capital. Correct? Yes, sir. So now we may close their capital accounts and we may find the balance. $26,975 is balance in account of Dinesh. $21,015. $10758. It is 2872. So in balance sheet we'll show capital balance of Dinesh 26972, Ramesh 21015, Naresh 10758, and Suresh, account of Suresh shows balance of 3,500. Six double two 4 5. Correct. Other liabilities include trade payables of 22,500, outstanding liabilities have reduced by 700. So outstanding liabilities are of 1,500 now. Asset side, land and building. Value of land and building is increased by 5,600. So new value of land and building 42,600. Furniture and fixtures. Furniture and fixtures reduced by 10%. Furniture and fixtures 6480. Stock, closing stock. Value of closing stock is unchanged, will remain at 12,600. Trade receivables. Trade receivables were of 10,700 and we have created a provision on trade receivables, provision of 535. 10165. Finally, cash in hand. Is 2,800 plus 8,000 brought in by new partner, 10,800. Cash at bank will remain at 2,200. Stock was increased to 14,000. So 86245 is total of balance sheet. Clear? So pause and copy. Friends, we are now looking at question 3 of past exam questions. Solution for question 3 of past exam questions. You are given Monica, Yedhant and Zoya are in partnership, sharing profits and losses equally. Zoya died on 30th June 2018. Balance sheet of 31st March 18 is given. After the balance sheet, in order to arrive at balance due to Zoya, it was mutually agreed that land and building be valued at 1,75,000. Debtors were all good. No provision is required. Stock is valued at 13,500. Goodwill will be valued at 1 year's purchase of average profit of past 5 years. Zoya's share of goodwill be adjusted in account of Monica and Yedhant. Zoya's share of profit from 1st April 2018 to date of death will be calculated on the basis of average profit of preceding 3 years. Profit of preceding 5 years is given. You are supposed to prepare revaluation account, capital account and balance sheet on 1st of July. So we'll start the sum with the balances which are given, friends. We are firstly given balance of capital. It is 1,75,000 and 75,000. We are then given balance in general reserve. What will you do with general reserve, sir? Will be distributed among partners. General reserve will be distributed among partners in their old ratio. Old ratio was equal, so will be equally distributed among all the three partners. Then, after the balance sheet, revaluation is given. After the balance sheet, land and building be valued at 1,75,000. So we are supposed to increase value of land and building by 25,000. To increase value of land and building, entry will be asset increases. So debit, land and building account debit to revaluation, 25,000. Datas were all good, so no provision is required. There is balance of provision already appearing in old balance sheet. Sir, provision given in old balance sheet is of rupees 2,000. Provision is having which balance? Sir, provision always have credit balance. In order to close that, provision account is to be debited? Yes, sir. So entry will be provision for doubtful debt to revaluation. Provision for doubtful debt to revaluation 2,000. Stock be valued at 13,500. Now in old balance sheet, stock is given at 15,000. So we are supposed to reduce value of stock by 1,500. Entry will be revaluation to stock. So if we now close our revaluation account, balance in revaluation account is 25,500. We would say profit of revaluation is 25,500. That profit of revaluation will be distributed among partners. Will be distributed among Monica, Yedant and Zoya equally. So it will be 8,500 for each of the partners. Profit of revaluation will be transferred to partners' capital account. After revaluation, they are asking us to calculate goodwill. For calculating goodwill, we are firstly supposed to calculate their average profit. Profit for last 5 years is 28,750, 35,000. 22,500, 20,000, 25,000. So average profit, friends, comes to 26,250. And goodwill, friends, they are saying is 1 year's purchase of average profit. So goodwill is 26,250 only. Now what should be treatment for goodwill? we need to raise full value of goodwill in their old ratio. What is full value of goodwill? 26,250. Old ratio is equal. So 8750 will be credited to each of their capital accounts. And will be then writing off full value of goodwill in their new ratio. If nothing is mentioned about new ratio will also be treated as equal. So we'll write off full value of goodwill in new profit sharing ratio. It will be 13125. 13125. So Monica's capital will be debited with 4375. Yedhan's capital also will be debited with 4375. Zoya will be made creditor with 8750. So Monica, Yedhant to Zoya. To Zoya's capital. Correct? Yes, sir. After treatment of goodwill, they are also asking us to calculate profit up to date of death. And that profit up to date of death is to be calculated on the basis of average profit of last 3 years. So average profit of 3 years will be 25,000 preceding 3 years plus 20,000 plus 22,500 divided by 3. So average profit comes to 22,500. So we may now calculate Zoya's share in profit up to date of death. Zoya's share in profit up to date of death will be how much? 22,500 is profit of 1 year. It is profit of 12 months. Partner Zoya died after 3 months. So we need to firstly calculate what will be profit of 3 months. And in that profit of 3 months, Zoya's share is 1/3. So 22,500 into 3 by 12 divided by 3, 1875. And this 1875, friends, is it actual profit or profit estimated? Sir, it is estimated profit. And since it is estimated profit, we'll use an account called P&L suspense account. Entry we need to pass is P&L suspense account debit to Zoya's capital. 1875, correct? So now calculate amount due to Zoya's executor. $98,125. To Zoya's executor's account. balance in other two partners' capital account will be carried forward. Correct. So we may now prepare our balance sheet. Capital of Monica 108125 and capital of Yedhant 83125. Then in liabilities, we'll show balance of Zoya's executor. Amount payable to her executor is 98125. Other liabilities include creditors of 20,000. Assets include land and building of 1,75,000. Investments unchanged 65,000. Stock in trade 13,500. Trade receivables 35,000. Provision is closed. Cash in hand 7,000. Cash in bank 12,000. And balance in P&L suspense, that temporary account we opened. Since that P&L suspense was debited, it is having debit balance, so will be recorded on asset side. Correct. Correct. So you may pause and copy this example, correct? Question 4 of past exam questions, friends. Question number 4. What is the information provided? Arup and Swarup were partners. Profit, the partnership deed provides inter alia. Annual accounts be balanced on 31st December. So they are following calendar year. Profit will be allocated as follows. Arup 1/2 Swaroop 1/3 and carried to reserve 1/6. Now, profit sharing ratio is how much? So again, if we see Aroop's share is half, Swaroop's share is 1/3. If we make the denominators same, Aroop's share will be 3/6, Swaroop's share will be 2/6. Can we say their profit sharing ratio is 3:2? Profit won't be distributed, some portion of profit will be transferred to reserve, but as long as profit sharing ratio of partners is decided, profit sharing ratio between partners will be 3:2 only. So they are sharing profits and losses in the ratio 3:2. In the event of death of partner, his executor will be entitled to following: capital to his credit at the date of death, proportionate share in profit based on average profit of last 3 completed years, goodwill based on 3 years purchase of average profit of 3 preceding completed years. We are given trial balance. Profit of last 3 years is given. Swaroop died on 1st of May 2019. We are supposed to calculate firstly share in profit. So to calculate share in profit, we need to firstly calculate their average profit of 3 years. Average profit of 3 years, that is 51,000 plus 39,000 plus 45,000. Average profit comes to 45,000. So what will be Swaroop's share in profit? Up to date of death. Swaroop's share in profit up to date of death. Swaroop died on which date, friends? Swaroop died on 1st May. Jan, Feb, March, April. He was there in business for 4 months. So his share in profit will be in profit of 4 months. And in that profit of 4 months, his share in profit is 2/5. Remember their profit sharing ratio is 3:2. So his share in profit is 2/5. So Swaroop's share in profit comes to 6,000, friends. Goodwill. Average profit we already calculated. Average profit for 3 years was 45,000. And they are saying goodwill is 3 years purchase of average profit. So it is 45,000 into 3. Firm's goodwill is 1,35,000. We are here only concerned with Swaroop's share in goodwill. Now Swaroop's share in goodwill will be 1,35,000 into 2/5. It is 54,000. So we have calculated his share in profit up to date of death. We have calculated his share in goodwill. Now we may prepare his executor's account. He died on 1st of May 2019. On 1st of January, balance in his capital account was, in Swaroop's capital was 60,000. Then there were reserves of 45,000. So on 1st of May, his share in reserves will be given to him. Reserves will be, his share in reserves will be 45,000 into 2/5, 18,000. Then his share in profit up to date of death. Entry for that will be P&L suspense. P&L suspense to Swaroop's capital. That is 6,000 friends. 6,000. And finally his share in goodwill. Goodwill to Swaroop's capital. His share in goodwill came to 54,000. Balance remaining. $1,38,000. That will be transferred to loan account. They are asking us to transfer that balance remaining in his loan account to Swaroop's executor's loan account. Correct. So with this we come to end of past exam questions of partnership. You may pause and copy this question.